This is the Hey Ed YouTube channel, and I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor. Please don't construe anything that I mention in this video as investment advice. Always do your own research before doing anything with your money. Okay, so today I'm going to do a little market commentary for you. It's been a little while since I have, so let's get you up to speed a little bit. Let's get right to it. If you haven't, please subscribe to my channel. And once you do, if you click on the videos tab, you can see all of my past recordings. And you can see some of the calls that I made during the year on the market. So I have been making calls on the market and I've been calling it the entire way. And I've got it all documented here for you. But let's talk about what's going on right now, okay? Make no mistake, this is what they call a trader's market, not an investor's market. What I mean by that is a good trader doesn't care which way the market goes. A trader can make money in both directions. The only thing a trader is concerned about is making sure he's on the right side of a trade, right? A trader really wants a volatility, and we have plenty of volatility in here. And I think we're going to have volatility for the foreseeable future. So for quite a while here, this is going to remain a trader's market. Investors, I'm sorry to say, are going to be very frustrated. And the trend in this market is down, and I think we have much further to go to the downside. So let's take a look at a few more charts to illustrate why I think this. Okay, so I am going to simplify this analysis, okay? I'm not going to get really complicated with all the cool moving averages and MACDs and RSIs and all the rest of it. I'm going to keep it very simple so that the most number of people can understand this. Now, you can see here where the current resistance sits in this market, and you can see where the red support line is, just under that $30,000 level. This is a 3-month chart of the Dow Jones Industrial Average. Okay, the market is still trending downward. It has a lot of overhead resistance. Could the market rally? Yes, it could. And it is actually very common in bear markets to have very impressive, very violent rallies along the way. It absolutely could happen, but don't think that the trend has changed, because it hasn't. The trend is still down in this market. And so this is a blown up version of the market, and this is the near-term support you want to be watching for. All right, so let's take a little bit longer view. Okay, so this is a 2-year chart of the Dow Jones Industrial Average. And you can see my next target on this market is at the 26,000 level, because that's where the next major support level is in this market. Now you can see that for really 2 years there, we had a sugar high going on in this market. The market should not have been doing this. The market was doing this because of a 2-year Federal Reserve sugar high that it was on. And I do talk about it in one of my previous videos. You might want to search through my videos and watch that one because I nailed it. We do have a nice solid double top there, which is very bearish. And now we have a nice confirmed solid downtrend going on in this market. So obviously, I just gave you a very oversimplified analysis of the market. But in the end, that's all you really care about, right? You want to know what this means for you at the moment. This market is going to go lower. We have not hit the bottom yet. With everything that's going on in the world and in our economies, there's no real reason for the market to turn around and go up, other than short-term oversold conditions, which again could absolutely happen. We could absolutely get little fluke rallies along the way, but that's what they're going to be. If we get them, they're going to be short-lived, and we are still heading down. And on top of everything else, we got a housing crisis looming in front of us like we've never seen before. I think the market could be worse than 2008, 2009. And if any of you remember that period, things were really ugly there for quite a while. And I think we're heading for the same kind of thing. So now don't despair. Okay. If you're a trader, okay, you're loving this. All right. If you're an investor, listen. Sometimes as a trader, we have a saying, sometimes the best trade you do is the one that you don't do. So for investors, the same thing, right? Sometimes staying in cash is the best place to be. A penny saved is a penny earned, right? I mean, look, we can go on, you know the cliches, right? The point being, preservation of capital should always be your priority over making money, because not losing money is just as important as making money, right? And so I think this is going to be a trader's market. For investors, listen, this market is going to go quite a bit lower, And again, I'm not giving you financial advice. I'm just sharing you one man's opinion, and you can do what you want with it. But you don't have to be a victim in all this. Learn a few things. Subscribe to my channel, and once in a while, you're going to get some little, nuggets of wisdom along the way that might help you out. And so join the channel, because every once in a while, I'm going to give you some ideas that's going to help you not just survive this market, but maybe even thrive in it, okay? And the best thing really you could do is find ways of generating passive recurring income that are not reliant on the market, all right? And we will be talking about more in my upcoming videos. So having said that, happy 4th of July, Edward Anderson signing out.
Copy that.